hours on the security.
Gotcha. Okay. All right. Great. Great. All right. So what I was explaining to Vicky, is that I'd love to just hear, your sales pitch and, see where it goes from there. And then, you know, uh, see if you have a great program. I'm with Primerica, which I'm sure you can
Yeah,
probably figure that one out. And,
for sure. Sure.
yeah, I've been in business since I was 18 years old and got licensed at 18 and then securities when I was 19. And now, I mean, our business models are somewhat similar.
Yeah.
Obviously, very different product lines and whatnot, and different philosophies. But yeah. So yeah, I have 43 locations around the country now.
Fantastic.
So it's been doing okay, and I'm sure obviously with the ring and everything like that, you guys are doing great, and that's exciting.
Yeah, yeah. So I'm pretty familiar with Primerica. My uncle was our VP, I believe is the title,
Yeah.
um, back in Phoenix.
Okay.
He has since passed away, but him and his wife were they were pretty successful. She still gets her, residuals, right? So
Cool.
good company. I'm not a Primerica trasher, that's for sure.
Yeah.
I got too much family blood over there. So,
True.
but awesome. Who's your upline?
Shane Rudman is our senior national sales director.
Not
He's
familiar. There was a gentleman out in again, another one of the T-Mobiles that I managed was Raintree in the 101. There was a gentleman that ran an office over there.
Yazapovic,
What was it?
Mark Yazapovic, or Richard Church.
Oh man, they're not ringing a bell. But
Okay.
he was
Yeah.
a client of ours in that store. So,
Oh,
uh,
okay. Cool.
but yeah, just kind of remember him. I actually hung my license with Primerica for a handful of years until it expired. I did. I was working with a firm that was an offshoot of WFG, and I didn't know anything about anything back then, and decided it wasn't for me. And I had a buddy that gentleman had recruited, and he needed a license. I said, if I can hang it, if it works for you, if it's going to help you get promoted, here you go. And I didn't
Yeah.
do any business any longer. But then when the pandemic hit, it kind of was an opportunity to give it a shot again. I found an organization that I felt like I could hang my hat here and plant my flag, and really believed in the team. And yeah, so that's kind of where it's at. I'll give you a heads up, Mark. You've been in the business a long time. I'm not here to convince you to start selling
Sure.
IULs or
I know. Yeah.
permanent life insurance. I'm not here to, it's not to be rude, but to have a pissing contest with you about it. But if there are some specific questions you want to ask, or concerns that you want to voice, I saw the video that you sent Vicky. I got to watching a little bit of it. I haven't finished it. But I know that you have some concerns about permanent plans, and I get that. One of the things I appreciate about WFG is that even though obviously our kind of, let's say, bread and butter is IULs, whether it be through Transmerica, Nationwide, Pac Life, or many of the other companies that we offer plans through. That's the only thing we do, right? Obviously, securities, right?
Mhm.
Roth IRAs, all of the fun stuff. 401ks, SEP IRAs, anything somebody wants on that side, we got them. But if somebody is a buy term and invest the difference type of person, they can come here and do that. And because we're a broker, on the IMO side, it's broker style, we can shop the best term. And I think one of the things that's priority for me, that again, kind of at the end of the day, would be a reason why I found this to be my home, is because of living benefits, chronic and critical illness. I saw that impact my family in a number of different ways. My uncle, two of his daughters had breast cancer in their 30s, right? Couldn't work for many years while dealing with that. And, if there was something that could have helped their family out, I'm sure that would have been, fantastic, because it wasn't a terminal illness, but it was enough that they couldn't work, So things like that, critical illness, chronic illness riders, those are important to me. And when I share them with my clients, they agree. It's, hey, that's something that's important to them. So I love the fact that we can find solutions, whether they're permanent or term or whatever the case may be, that kind of fits those needs, you know?
Okay. Yeah, I think one thing that we were discussing, Vicky, over messaging was, I kind of just said, hey, you know what? I'd like to hear your sales pitch, kind of how you approach it. And because she was convinced that IULs were a phenomenal investment and a phenomenal program. And and obviously I beg to differ, and so I said, all right, well, show me what you got, and let's see if you can do the math and prove me wrong, I guess is the best way to put it. And because I really do believe that there's a definitive, in the insurance world, in life insurance especially, is not bought, it's sold. People don't come in saying, I want XYZ. They go to the insurance agent 9 times out of 10 and saying, I don't know, I just need some insurance. What do you got? What's good? And then they kind of rest on the quote unquote expertise of the insurance agent. And as Primerica was founded because, we understand the game. We know the game. We know how insurance agents work, and they think with the biggest commission, and they're going to push the biggest commission. And IUL is no different. It's the same thing dressed up for 100 different years. It's just every 20 years they change the name. They change the marketing pitch. They change it to infinite banking. Then they change it to universal life in 1980. And then it just keeps morphing because people start discovering, oh, wait a second, this is not good. Then they say, well, let's dress it up this way. And then they market it again. And then eventually people figure out, oh, this is not good. And now IUL is the flavor. And based on all the lawsuits that I'm sure you're aware of, Transamerica was just lost a lawsuit for $88 million or something like that, for misleading sales practices. And it's not just Transamerica, which is the insurance company that you guys go through. It's tons of other insurance companies and all the big names that everybody knows. And so at some point, people must realize there's a smoking gun here. And the common thread amongst all that is that it's being sold as an investment. It's sold as a tax, great tax vehicle, which is just not true. It's sold that you can take the money out, and tax free and this kind of thing. When in reality, whenever you pull money out of a cash value policy, you're being charged 6 to 8% on that money, and that money does not go back to the policy holder. That money is interest, just like at a bank. It goes straight to the insurance company. And so, all of these different factors, it becomes blatantly obvious. That's why well-known people like Susie Orman and Dave Ramsey just absolutely rail against any type of cash value. And so that's why Primerica is the kind of the Robin Hood of the financial, industry. We educate our clients, and that's why insurance companies hate Primerica. But I'd love to hear
Um,
why you feel that I'm wrong.
Go ahead.
Mark, you were also mentioning how there's a lot of hidden fees that people don't talk about and broken promises with those high costs.
Absolutely.
So we can definitely show you all of that. I did respond to all of your messages in regards to that, and you completely ignored it. So I just kind of want to put it out there.
Well, what
Because
I would say is
I
that
also asked you for specific examples and certain policies so that we can actually work with something, like I asked you if maybe you can show us like an actual structured plan that you saw or anything like that. Um, but you didn't have any examples to show me, so we didn't have anything to really
no,
work
it's
with.
no, it's not that I didn't have any examples to show you. It was what I was telling you was you were trying to convince me that it was a great plan, that I was incorrect and this and this. I said, well, let's just jump on a call. And because I know, based on your responses, it was rather apparent that it was run through Chat GPT, which is fine. Everyone uses it to a certain degree, but my point is that, hey, let's get on here and you convince me. Tell me what's great, and then I'll shoot holes in it if I see that there's something wrong. But you tell me if it's, why your plan is so great. That's just kind of what I want to hear is like, why is your plan so great when every consumer advocate out there, and when I say every, I mean the mass majority, because nothing is ever always or nothing, but the mass majority of consumer advocates preach buy term and invest the difference.
So
In
can you
your
help
eyes.
me understand a little
No,
bit
it's not
about
in my
buy-to?
eyes, Vicky. It's in what I'm just you didn't even hear what I said. I said in when it comes to consumer advocates, which I am not because I am a part of an insurance company. Neither is Neely and neither are you. We're affiliated with a firm. A consumer advocate is someone who's a complete third party. And those are the people that are advocating 9 times out of 10 buy term and invest the difference by far outweighs any type of permanent life insurance. And when you look at the cost structures inside of a cash value policy, on average, you look at the average cash value policy, the first 4 years, no money actually gets credited to that cash value. So when you look at that, if I'm putting in, let's say, $2,000 a year into this policy, which is roughly $166 a month, and let's take out a certain percentage, let's say 20% is going to pay for the actual life insurance cost, then that means the other 80% should be going into the savings account, the cash value. Well, in the first 1 to 4 years, typically it's 3 to 4 years on average, based on my experience, no money gets credited. So I'll ask you a simple question, Vicky. If I'm putting that money in and no money is in the bottom line in the account, what kind of net rate of return is that? And that should be a very simple answer for both of you being financial professionals. So if I put that money in and there's zero at the end of the day, what is that rate of return?
So I've never had a client have a plan with me that at the end of year one had absolutely no money in the cash value.
Now, Neely, you're talking about the projected amounts.
No, I've been doing this long enough that I get client statements. I've
That's why
never
I
had
kind
a
of asked
single.
you if you had some kind of policy that you kind of know that where you saw in itself, like, oh, look, this is how this policy was structured. Because it, like you said, we're all financial professionals here. So it really depends on the professional that did the policy that structured it. Because like you mentioned, there are some people that just go for it for the cash, the biggest commission. And I feel like that's what I love about where I am at right now, because that's not what our mindset is. We are not about commission. It's about helping families, changing lives, and
Okay,
not about our main goal is not
okay,
commission.
let's be real, Vicky. Let's stop with the hyperbole and all the nonsense. Is that the reality
I
is,
am being real.
of course you don't say you're not in it for the commission, because come on, otherwise you'd be doing it for free. Okay, no one is doing it for free. Okay, I'm not doing it for free. All right, now I do love helping clients, of course, but at the end of the day, everybody needs to get paid. But the way I look at it is it has to be a win-win situation. And when these companies, yours included, are being sued nonstop. And in that video, you're talking about two attorneys discussing lawsuits about insurance companies, and they are going on and on and on about hundreds and hundreds and hundreds of millions of dollars of lawsuits against insurance companies just like yours and yours included. There's something wrong.
Totally understand.
It's
Totally understand. But
yes,
that's like blaming an Uber driver and then just blaming the entire Uber, versus one horrible driver.
no, but that's the problem. See, you're missing again my point. My point is it's not one in particular insurance agent. It is the mass majority of insurance agents that are perpetuating this stuff ridiculously. I mean, selling it like it's going out of style. My parents are immigrants from India, and I know this is an anecdotal story, and believe it or not, I don't care, but I've been telling this story for 32 years because it's very personal to me. They came with 20 bucks in their pocket. 1975, they bought their first company, did very well, and then trusted an insurance agent from Northwestern Mutual. And they said, if you want to be a great American, all Americans save for retirement with cash value. And so they were paying $14,500 a year into 16 different cash value policies from 1975 to 1989. That's the equivalent of 50,000 a year today. And when they bumped into Primerica, my dad was 47, and you can smirk all you want, Vicky, but the reality is this, is that insurance agent or the Primerica agent looked at the policies and said, I can't even read this. You read it because you're going to kill me if I read it. And
It
bottom
was
line is they were going to be retired at age 65 and dead broke at age 66 after investing all that money in there. And me being in the business for 33 years, I've seen it time and time again. And if you want, yeah, I can pull up some cash value policies, but this is what's going to happen. And I know exactly what you're going to say because you've already said it. I'm going to show it to you, and you're going to say, yes, that is horrible because that was done wrong. And that insurance agent did it wrong. We do it right. And it's what every insurance agent says whenever they're confronted with the truth. They say, yes, you're right. That is a bad apple. They should be taken out. We do it right, though. And I've never seen it done right. So that's what I'm asking. That's why I didn't want to throw you projections or policies and all this kind of stuff, because you're just going to say that, just like you just did. So I want to hear from your mouth, from Neely's mouth, show me your proposal and let me look at it for myself. So that way you put your signature on your plan. Because I can show you a Primerica plan. I'll put my signature on it every day of the week. But if you're willing to do that, show me your stuff and then let's look at it.
Should we compare term versus term price point with living benefits?
I'm not talking, we're talking about the whole conversation is revolving around IUL. And term insurance, just like you mentioned, you said price versus price and all this kind of stuff. Look, we all know price is only an issue in the absence of value. So Primerica never proclaims to be the cheapest term. No, we don't. But we do look at ourselves as the best term because we have certain benefits that a lot of companies do. Now, maybe there is an insurance company that has better. Maybe. I'm not going to put my signature on and say we're the by far 100% the best. But we're damn good. I'll tell you that. And we destroy IUL every single day of the week. And the whole point of the conversation, Vicky, was IUL. So what I would like to see, Neely, is what is your proposal? Show me the plan that you guys say is so great. And then if it's great, hell, I'll resign from Primerica, come with your company and let it rip. But that will never happen because you can't show me a plan that you know I'm good. You know I'm knowledgeable. You know I'll throw bullet holes in everything that you shoot at me. That's why you won't share your screen. Or maybe you will.
Well, here's the thing. Again, I didn't come on here for a pissing contest. I'm not.
This is not a pissing contest. This is a contest of ideals.
It seems like it is.
What'd you say, Vicky?
I said it seems like it is.
It's not a pissing contest. No, I'm just trying to figure out, do you guys have the guts to come to a person like me who really knows his stuff as opposed to going to an innocent client that really is clueless because they're an engineer, they're whatever, but they're not an insurance professional. But I am. So go ahead and share your screen. I would love to see it because the reality is, going back to that original, I want to put this on there so you guys understand. When you put money into that insurance account and there's a zero at the end of the year, that's a negative 100% return.
Again, Mark.
And you're going to say that your plans don't work that way. So show me your plans.
I've never had a client. I'm not going to share client information.
See, not client information. Black out the name. I don't care. But
I've never had a client.
Calm down, Mark. Let him talk.
Okay. Yeah, you're right. Go ahead.
That contributed even the minimums and ended up with absolutely zero in their cash value. Now, in accessible surrender value, correct. Yeah, it's not going to be available the first, especially if they're doing minimal amounts, it's not going to be available the first 4, maybe 5 years. But there's a couple of things that you talked about, that you mentioned, that I just want to make sure that you're a little more aware of. And again, I know after 32 years, 4 months at Primerica, nobody's convincing you to go anywhere else. Nobody's convincing you that IUL is better than buy term invest the difference. What I will say is that just like you say, you've experienced clients that have, had bad IULs, or I think the term on the video was they've blown up or imploded or things like that. I've got personal anecdotes about how buy term invest the difference was not the good strategy. And most of these strategies are not good strategies because Americans, individuals, people are human beings, and they simply don't do what they know they should do. They're not consistent with a plan. And it's up to people like yourself, like myself, like Vicky, to help people understand what they're signing up for and to help them stay consistent. Just the same as, anybody and everybody can get a um, a, a, a gym membership, right? But not everybody's going to go. Not everybody's going to be diligent. Not everybody's going to be consistent. But people that pay for an advisor, I'm sorry, well, I'm talking about an advisor, but people that pay for personal trainer are more likely to go, right? That's the way I see things like IULs. Yeah, there are a little more costs associated with them, but when you treat saving like a bill, you're more likely to do it, right? And again, at the end of the day, I've not had a single client, I've not seen a client with anybody on our team that at the end of year 1, 2, or 3, they have $0 in their cash value, right? They have money in their cash value. It might not be more than their surrender value. And these are not short-term vehicles, just like a Roth IRA should be a short-term vehicle, right? If somebody wants a short-term vehicle, we've got high yield savings accounts, we've got brokerage accounts, we've got things that people can invest in for the short term. This is not that, right? And it's also not the end all be all. You should be getting, what's the order of money? Get free money first. If your 401k's got a match, get that money, right? We're not telling anybody, hey, don't invest in your 401k, don't do those things. We're not dumb, right? Get the free money, and tax advantages over taxable, right? Now, depending on someone's income bracket, maybe tax deferred's better than tax advantage, right? Or Roth style tax advantage, right? Depends on what their plans are for the future, how they're saving, all of these things. I'm not interested in, I know you're recording. I'm not interested in being one of your trainings. I'm not going to show you, oh, this plan is this, because we know they're just projections on illustrations anyway, right? But one of the things that you said is 6 to 8%. Whole life policies, 100%. They're charging 6 to 8% interest, and that money's not going anywhere except to the insurance company. I hear you on that. I have a policy. I've borrowed against it. I've chosen an alternate loan. I pay a 5% interest. My money is still in the plan. It's still growing based on the S&P 500. It's got a cap of 12%, or I'm sorry, a cap of, what is the S&P cap? 10 point something percent. I've got a blend of a non-capped option that's it's volatility controlled index. I've got S&P. So when the market does well, I'm still making money. As long as the market does better than 5, I'm winning, right? As long as my account is earning more than 5, I'm winning. Risk I'm willing to take is that, if we do less, or if the market goes negative, it's AI is a bubble and it bursts, then I'm paying 5% to borrow that money, right?
The reality is, Neely, you already are borrowing from that money because you just said it. You said, if the market does over 5, I'm still making money, which means you are paying that insurance company 5% to borrow your own money out, which makes no sense because I'm the one, in your case, you are the one putting money into that account. Why are you being charged for it? And then the second thing that you brought up, and I'll just empty my clip and then that way you can respond. When it comes to the net surrender, okay, when we talked about the first 3, 4 years and whatnot, it still makes no sense because in an IRA, with a Roth, even if you wanted to pull your money out, yes, you will incur a small penalty only on the capital gains, not on the principal that you put in because it's after-tax dollars. So therefore, that analogy is not even close because in your case, you lose 100% of your money if there's an emergency, and in an IRA, you lose infinite, just a tiny bit. And then the last thing I would bring up is, in your plan, you pay for both things. You pay for a savings account, or in your case, if you want to be illegal and call it an investment account, so be it. But number 2 is you pay for the life insurance. But when the client passes away, they only get one. They get the death benefit. And if they want to get both, then they have to pay, their premium goes way up. And so the point is that if you die, you lose your entire savings account. How is that considered a great plan? And in buy term, and you talked about discipline, I agree with you. Most Americans are just not disciplined. But saying that IUL will solve that problem is false because It's the same thing with buy term. They have to have the discipline of making 2 payments. And in your case, they have to have the discipline of making 1 payment. So either way, they have to have the discipline, because in our case or yours, they can just hit cancel on their bank draft and the plan is dead. So saying that they have to pay extra for a quote financial professional to help them make sure they get it done, like what you said,
That
it
wasn't
doesn't make any
my-
sense.
That wasn't my point.
That
The
was not
financial
true.
professional side wasn't the point. I was likening investing in a trainer, like having some accountability. That type.
But where's the accountability when it comes to the IUL policy as opposed to BTID, buy term and invest the difference? There is no accountability. Like what I'm saying is, in both cases, I'm not saying that ours has accountability. No, I mean the accountability in both cases is a monthly draft, and either they do it or they don't. And we have a lot of clients that follow through on the plan, and we have some clients that don't, and so do you. But the point of the plan is that in our plan, if they follow through, God forbid, if they pass away, they're getting their IRA and they're getting their death benefit. And in your case, they're getting the death benefit and they lose all the money that goes into the savings account. It goes straight back to the insurance company. I know, not necessarily, because if they want both, they can, but now their premium gets jacked up. So
actually,
one way or the other.
Actually,
absolutely it is. Come on, Neely, come on now.
No,
you know that.
Actually,
well, let him explain.
Increasing death benefits are lower than level, but regardless, clients can get both. It's not whole life where it's one or the other level death.
I know they can, but the premium gets jacked up.
Not necessarily.
What I'm saying.
Not necessarily.
So anyway, but I mean, if I was here, I'd be glad to listen to your sales pitch. But I think both of you really know when you're going up against Goliath, and it's not going to happen. Like,
You're so funny. You crack me up.
I know, because I'm telling the truth, the reality. Vicky, yeah, but
I beg to differ, but no,
I know. But listen, you guys, this was fun. I think it's the interesting thing is that I haven't had an agent confrontation in a long time, because they never do it, anymore. Insurance agents are scared, and I commend you, Vicky.
I'm not scared whatsoever, Mark. Just so you know, I am not scared.
I know. That's what I'm saying, is I commend you. I will tell you.
I feel like all you came here to do is just to basically, like you said, unload your clip.
Yeah, absolutely. I want to hear what the alternative is, and if you're not going to give me what your best pitch is, I'll give you my best pitch.
Yeah, it seems to me, at least, that you just came here to fight.
Well, of course. I mean, that's the whole point of it's
not the whole point. The whole point is to hear somebody else out without having to be adults, without having to fight. And you just sometimes you won't even let us finish talking. Like you wouldn't let Neely talk, you wouldn't let me talk. So I don't think this is going to be a very productive conversation.
I agree, because you guys won't share with me your pitch. You won't show me anything, and so it's like, okay, I'll do the talking then.
Because you're just shooting without, like you're like, here, protect yourself, and you just keep shooting your shots. So I don't think this is going to be very productive at all, especially since you're not trying to even listen. Like to give us some time. You won't even let him finish talking. And you see how I'm still talking and you're interrupting me?
Yeah, I know.
You're still interrupting me. So I think that's very rude. And I don't want to have to put Neely through this. He's a very busy man. And I feel like just taking him out of his schedule, just to have somebody argue and not even give us the time to continue talking and constantly interrupt, I don't think that's very mature of you. Okay. So I'm going to go ahead and ask.
I tried to tell you, I said, give me your pitch. I'm listening. And no one gave me any, neither you or Neely gave me anything.
You can go ahead and rewatch this recording and see how you were not really mature about this conversation.
All right.
So thank you so much for joining us. We really appreciate it. Okay.
Take care, you two. Bye.
Bye-bye.